Holy smokes, everyone. What the flippity flip flap flop is going on with the banks right now? First, Wells Fargo shuts down all personal lines of credit, but now we're starting to see more and more stories of banks not wanting to lend to anyone whatsoever. We're also seeing the money supply is contracting. Banks are parking $1 trillion and doing loans with the Federal Reserve every single day. Why is this happening? What do they see coming? And what do we need to know right now to prepare? Well, that's exactly what I'm going to be going over in today's video. So let's not waste any time, everybody. Let's get straight into it. So I'm sure you've all seen this news story, which was huge news, of Wells Fargo shutting down all personal lines of credit. But why are they doing this, everyone? Well, have a look at this, everybody. There's an unemployment cliff coming and more than 7.5 million people may fall off. Federal unemployment programs that have paid jobless benefits since March 2020 are poised to end September 6th, and it doesn't appear Congress will extend them yet again. Those eligible to collect state unemployment insurance may continue to receive weekly payments past Labor Day, but they will get $300 less per week. So this is just the first piece of the puzzle, everybody, but there's huge amounts of more information which I'm about to get into that proves we are not out of this recession yet, and we could be possibly facing an economic meltdown that will lead us into a deep, prolonged depression. Because first, we've got 7.5 million people that are going to lose their unemployment benefits. So that's going to be a lot of money taken out of the economy. But now look at this. 11 million US families face evictions as CDC moratorium expires. So that's another piece of the puzzle, everybody. 7.5 people losing unemployment benefits at the time when 11 million people are facing evictions, and not to mention the millions amount of people that are going to be facing foreclosures as well. So that's 3 pieces to the puzzle here, but there's more. The unemployment rate is now rising. They were saying how strong the economy was, how it was recovering. Well, now it has hit an inflection point, and unemployment rate is going to keep rising, everybody. And look at this, everybody. This is the Federal Reserve reverse repo market operations, and it just hit $1 trillion the other day on July 30th. So that means the banks, they're scared. They don't want to lend out their money. They've got so much cash on their books, and say cash is trash. Well, banks are lending this $1 trillion a day. That's right, a day to the Federal Reserve. They're getting paid 0.05% interest, and it's better than getting a negative interest rate. So why are they parking there, everybody, and why are they not lending it? And the story of 2020 was money print to go burr, and the US dollar increased at a rate of 27%. The money supply increased at its peak of 27% year over year. But we can now see the M2 money supply growth rate is plummeting and is now down at just 12%. Okay, so let's put a last couple of pieces of the puzzle together. We've got unemployment benefits ending. We've got a wave of evictions coming, a wave of foreclosures coming. We've got unemployment increasing. We've got banks not wanting to lend. And now we just got this new data which shows the economy is about to make a huge turn. Look at this, everybody. US GDP rose just 6.5% last quarter, well below expectations. And what you have to know is, everybody, we're not actually having growth. Look what happened here in 2020. We actually had GDP fell by a huge record 31%. So all we're seeing is the economy recovering or rebounding, a debt cap bounce, if you will. So we're not actually having growth like they're saying. The economy is just trying to get back to where it was. When we look at trading economics data, GDP is still actually below its 2019 levels. Okay, but why should we care? Let's have a look. And this is what we have to know, everybody. The Dow Jones estimated that growth was going to be 8.4%. So the economy is making a drastic turn. And this is also when initial jobless claims are rising. Last week, it was 400,000 weekly jobless claims, and that was above the $380,000 jobless claim expectations. So what does this mean for you and me and the economy? Well, what this means is, everybody, we've just spent $10 trillion fighting this pandemic, fighting this recession. They're going to have to increase taxes like crazy. Inflation is getting out of control. People's purchasing power has been destroyed. And guess what? It could be all for nothing because cases are rising yet again. And imagine if we spent all this hundreds of trillions really around the world on this stimulus and to get out of this global recession, for all that to be for nothing and then to fall into recession again. But this recession will be much worse because, as you can see in the US, the government is, desperately trying to renegotiate the debt ceiling. They can't really take on more debt right now. So if the US does fall into another recession, they're not going to be able to, just pull out another $10 trillion and give out stimulus when they're already, in their eyeballs of debt. They can't really afford that right now. And also the economy is going to be contracting because a thing that led to the economy recovering was these $1,400 stimulus checks, and most of the recovery has come from consumer spending. And again, a tool that got us out of the last recession was money print to go burr, was Jerome Powell, the Federal Reserve. They were printing money like crazy. They were able to drop interest rates to zero. Well, now interest rates are already at zero. They've already got the money printer going, full blast. And the difference for this recession than last recession that we had in 2020 is now we've got rampant inflation to deal with. So the Federal Reserve can't just, turn its QE from $120 billion a month to $1 trillion to get us out of this recession, because then what that's going to lead to is hyperinflation. So really, people, we're pretty much screwed here. We're pretty much stuck. The Federal Reserve is trapped. All this QE, all this quantitative easing, all this phony economy and phony stock market bubbles and housing market bubbles, it's leading to an end game. We're about to hit the end game in the economy right now. And people, I don't see a way out. Do you? They've already used all the stimulus. Unemployment's going through the roof. We've got rampant inflation. Interest rates are at zero. So what are they going to be able to do to pull us out of this deep depression that's coming, everybody? What I see that's coming is unemployment's going to go up. We're going to fall into a double dip recession. There will be a bit of stimulus announced and there will increase QE, but it's not going to be enough, everybody. And what they've done is they've pulled forward demand from the future. They've pulled forward all the growth from the future just to get us out of the recession that we had last year. So what that means is we could be entering into a lost decade of low or no growth. And a question you have to ask yourself, what did all that stimulus, that trillions and trillions of dollars stimulus, get us last year? Do we get more innovative? Do we get better health care? Do we get better schools, better education, better technology, better standard of living? No. All it was to bail out the banks, to bail out the stock market, the housing market, to keep markets high, to devalue the US debt, and to pay people to sit at home to do nothing. They locked down the whole economy. They bailed out zombie businesses. It didn't make us any more efficient. It actually made us less productive. So everyone, that was just a quick update on where the economy is heading. It looks like everything's been great for the past year. The stock market's been flying, the housing market's been flying, but people, I think this has been, a fake recovery. All it's been from is from the stimulus, from the QE, but now that's being taken away. We're starting to see the real economy. We're starting to see growth slow, and we are going to enter into a double dip recession. I don't see how they're going to be able to avoid it. But of course, everybody, that's just my thoughts and opinions with the current data. Things could change in the future, so we'll keep you updated. But what do you think, everybody? Are we going to head into a double dip recession? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you updated with the latest happening in the economy, with the stock market, housing market, and global finance news. Now, if you're bored, I'll put up some other videos here. I'll see you all there.